Good morning, everybody. It's Chris from Serene Education with the 4 majors and update for the 20th of November 2013. Okay, 4 majors this morning, starting with the Euro against US dollar using the FX8 Ultimate template. And let's have a look and see what's been happening yesterday. Some positiveness through the end of play yesterday, and looking for that news announcement, because you can quite clearly see that we've had 1, 2, 3, 4, 5 consecutive days of resistance at this 50% retracement level on the monthly, which is important. So now we're above it, which is good. You can see quite clearly that the long-term sentiment for Euro is looking positive. Fantastic. RMO is above, RSI indicator is above, which is great. Now you can see that the monthly, you can see price yesterday trading above the monthly, but straight into the 23.6 on my weekly. Fantastic. So now I know that the sentiment's long on the monthly time frame, which is a good sign. However, the weekly needs to be closed above. You can see since the close last night on the US session, price has fallen. So we've seen Euro pulling back. It's imperative that price gets above this weekly 23.6 level. Get above that, then it's plain sailing towards those current highs we've come through at the latter part of October. We have a slight consolidation before then, so we have two genuine targets to the upside. First one about 100 odd pips to, and the second one from above that level to the all-time high, which will be our monthly and weekly high, is another 150. So there's more than enough in the tank. So just got to be patient, get above that. Now, a lot of people would have got triggered into this yesterday, but the sentiment not moving through. The most important thing is we have got our bullish engulfing candle. Fantastic. That's what we wanted to see. Then I want you to see a candle close higher on my 4-hour close higher. So this 4-hour, you can see quite clearly a lot of consolidation here on my 4-hour time frame. Yes, it was above the 50% retracement on my fib. However, I needed to see a close higher than that. We did get it, but that was straight into my weekly fib on my 4-hour time frame, which also constituted to be my institution moving average on the same time frame. So then I'm looking for an hourly close above that to confirm upside. That failed to materialize, as there was quite a lot of resistance above price on my 4-hour time frame, and subsequently we've seen lower swings or pullbacks. So still positive nonetheless. You can see the sentiment still driving higher. However, intraday, that negative sentiment coming through on the pullback and the R-square complementing that selling. So now we got a pullback. As long as price maintains above 50% the monthly fib and still continues to make swing highs or this trend higher, then we should look for a reattempt of the 23.6. It's imperative that we get to see price closing above that level. Failure to do so will then result in us not failing to actually take an opportunity to the upside to those target points I mentioned on the daily time frame. Moving on to sterling. Here again, upside in favor. You can see the candlesticks very much positive. You can see the indicator box over here very much positive. We have a number of the time frames telling us the R squared is generally not in favor of this buying center that we're seeing. That's primarily because we're still very much in a consolidative range. You can see the daily, the last 4 days in particular, we haven't really moved higher. We have consolidated, and we are finding a bit of support, and that support is coming in the shape of the prior support and resistance level. Here quite clearly an evening star after a bounce higher. Then we had a retracement back towards the weekly fibs, then a bullish engulfing break higher at a support level, and price is now reverted back to the current highs, broken above it, and now consolidated. As long as she spends time above the 160946 and change, she's then likely to build. Yesterday's candle, you can see the buying sentiment after an indecision candle. More buying sentiment at the top of the candle, forming a hammer. Now we want to see a bullish engulfing candle close higher than this range, ideally on a 4-hour. So it'll be the high of this indecision, the spinning top or doji here that we saw a couple of days ago. Get it close above that on our 4-hour. And then we could target the highs that we've just come from, which happen to be our weekly fib highs here at the 1626 and change level. So drop down to the 4-hour time frame. Just squeeze it so you can see it. So this is my 4-hour time frame highs. Got to get above that. You can see quite clearly price has been very, very consolidative. And if price is consolidative, you're not really making any money because you're not seeing any return on time invested. The good thing is, though, we are seeing still seeing a blue arrow. Candlesticks are still blue, so it tells me the sentiment is still looking long. Institution below price, which is positive. RMO above the zero line, which is telling me it's still very positive. The only thing we don't have in our favor at the moment now, and it's primarily because we're trading in a consolidated range, is the RSI indicator is below the zero level and dark red. So there's no trade, no buying opportunities. We need to see a nice bullish engulfing candle close higher. If that's the case, then it might throw the RSI indicator above the zero level, which will go bright green, which will tell us it's genuine buying, and then a nice close above 4-hour higher than the 4, and then we could target the weekly high, which is a reasonable 100 odd pips away from where that resistance level is at present. So here, patience is a virtue. We have a lot of news out this morning. Well, not a lot of news. We have some important news out for sterling this morning in terms of the asset purchasing facility votes this morning with the MPC, and we also have the official bank rate votes for the MPC. So very, very important. Are we going to see a change in sentiment like we did with the JOCI and the Eurozone? We had interest rates and a drop. Could we see the same thing happening from sterling? It could. They're expecting no change, and Carney's pretty much mentioned that he's not going to change anything until they actually see unemployment drop below 7%, and it's only trading at 7.7 at the moment. So it'll be interesting to see what happens. And so yeah, clearly consolidation, not going to be making any money. Consolidation here, you can see a nice bearish engulfing counter close low at a 4-hour, but you can see the 4-hour clearly not closing below the institution. If it had closed below the institution, then we might have seen a different outcome. Failure to do so has seen price moving to the upside and reattempting the prior high, because we are very much in a positive move to the upside. So moving on to the US dollar Swiss franc. Yeah, again, if euro is moving higher, then the US dollar Swiss franc should be moving in the opposite direction. Euro is showing positiveness, and here the US dollar Swiss franc is showing negativity. Long-term negativity, however, intraday pullbacks, and you can quickly see the prices pulled back recently, but you can see consolidation intraday has led to a bounce on the 50 period moving average intraday. You can see a lot of consolidation in and around this area, which is putting price off at the moment. Consolidation, further consolidation, and now we're trading back into this consolidation. The good thing over here though is the price is still making a low. You see a nice juicy break of the consolidation area yesterday. Red arrow, red candles, RMO below, OSMO indicator very much below, the institution above price actually resisting. You can see that price is trading below the weekly fib as well. So ideally our next target should be our next weekly low and towards our monthly low. So back to the 38.2 would be our next potential target, and prices from where price is trading right now to the level is a healthy 230 odd pips. Take away the spread, there's more than enough in here to see a value return. However, got to see a more genuine breakout of this consolidated range. Price is making lower swings, which is important. Swing low, swing low, swing low, dictates downside. Drop down to our 4-hour time frame just to see that happening. You can see the 4-hour break lower into the institution. If that daily had closed lower, then the 4-hour would have obviously closed lower than the institution. That would have really given us a juicy entry to target the downside. So here, negativity in play, which is fantastic. We do need to see that institution moving average being above price, acting as resistance. Below price, still supporting her, which is a no-no in a negative trend. So got to wait patiently, get a nice juicy close lower. What you can do is take the current low that we have on our 4-hour to the current high and see where the fib levels drop. You can see quite clearly here, the 38 and the 50 are pretty much on either side of this consolidation. So that would be my no trade zone. And it's good to have these little things so that stops you from getting into any consolidation trades. So between 38.2 and my 50% on my fib retracements, that's going to be my no trade zone, because the institution is smack bang between those two. Get below the 50%, then we'll be below the institution. It'll be moving with my long-term sentiment, and then I can look towards the 61.8, the 78.6, and then back to my current lows we've had here in the latter part of October. The other scenario would be price bounces on the institution, it gets above the 38.2, look for the blue arrow, blue candles, RMO to get above the zero line, OSMO to get above, and then we have a potential continuation to the upside or a reattempt at the current highs we've just come from. So here, got to be patient. Trigger alerts on either side of this on the 4-hour time frame. Wait patiently for my confirmation candle and then trade the outcome. US dollar, Japanese yen. Here again, great news on non-farm payroll last week has pushed price above this wedge formation that we've seen occurring over since April. She's been in this tight wedge. We've had a break. It's now trading above the 50% retracement level on my monthly fib, which is a good sign. As long as she stays above that, then we should be looking for top side. You can quite clearly see if I just zoom in, price is consolidated once above the monthly fib at a prior consolidation high above the fib here that we saw in September of this year. We've seen a nice bull break. However, price has not taken the momentum, driven it higher, because it's actually traded straight into a price support and resistance level on the upside of the monthly fib. So here, patience is a virtue. We know that buying pressure is still with us because it's broken above a monthly fib. Perfect. You can see that there's a lot of red coming in here. There's more positiveness than negativity. And as long as that maintains above the 50% retracement fib here, then we should be looking for price to reattempt higher highs. We've had a bullish engulfing candle yesterday. Well, we've had a hammer and almost a bullish Arami type hammer on the support, which is great because we've had the breakout, the pullback, and now we're likely to see a continuation. We want to see a continuation. So we want to see the daily high now being breached, and by price trading above the daily higher, we'd be breaching above the prior resistance high that we saw just recently back in September, and that would give us a genuine sentiment, new sentiment drive that we should be looking for higher highs, and then we could target our weekly fib all the way right up there. But in between all that, we have a price support and resistance level, which could be our first target, which is a healthy 113 pips away, and then ultimately look towards that weekly high, which is our April highs, which is another 200 pips on top of that. So there's about 300 odd pips of profit to be made to the upside. We just got to be patient on the breakout, because what could happen is we fail to break the current daily highs above this level. Price starts to look negative, gets back below the monthly fib here, retracement, and then price reverses to the downside. It's clearly happened in the past, and it can clearly happen again now. So got to be patient, wait for a confirmed genuine sentiment push by the institution moving average, or the institutional traders. That in turn will then allow us to tell us this genuine sentiment driving higher, and then we can get in and we can profit nicely from that. As you can quite clearly see, blue institution below on our daily, RMO is above. The SMA indicator is above but consolidated, primarily because we have been in a consolidated range on the breakout. So here you got to be patient, drop down to a 4-hour time frame, take the current highs on the daily, is where the 4-hour candle has to close higher. You can see over here we've had a lot of red arrows coming into it. The SMA indicator has been below the zero level as we've been consolidated. The RMO is still above, so it's telling us it's still in a very much in an uptrend. Swing high, swing high, swing high, swing high, swing high, swing high. Perfect. As long as it keeps making swing highs and not swing lows, then we should be looking for upside drive. The moment it makes a swing low, in this case, which will take us back below the 50% retracement on our monthly fib, then we should be looking for a totally different outcome, back towards our institution to start with, long term. But until that happens, we're still looking high. So here, patience is a virtue. Get above all that, and then we can trade with a lot more confidence to the upside. That's it, guys. Short and sweet, to the point. Please be aware of the news out this morning for sterling, in fact, and then this afternoon we have a lot of data for the US market, guys. A lot of CPI, a lot of data for CPI month-to-month figures, retail figures, month-to-month figures, the CPI month-to-month figures, existing home sales figures, which is very important. They're expecting a slight contraction there, which is not good. We want to see expansion. And what else we have? We have a lot of FOMC, a lot of Fed speakers talking this afternoon, guys. In fact, there's about 4 or 5 of them talking this afternoon. But in between all that, we have the crude oil inventories as well, which is important for both the US market as well as Canada, the loonie, because of the oil. Okay, look at commodity prices or pairs. You do the maths. Okay, leaving you with that. Have a fantastic trading day, and I'll catch you guys first thing tomorrow morning. Until then, you guys trade serenely.